Welcome into your real estate market update for August 2023. And we have a lot to cover this month. There's just been a great deal of confusion out there about the market, and for good reason. What in the world is going on? Are mortgage rates going to stay high? What's going on with home prices? Why haven't they fallen? All kinds of things like that. So if you've been considering buying or selling a home and are just not sure what to do, or if now is the right time, stay with me. We're going to cover that today, and I'm going to share the data with you that's going to enable you to make the best decision for you and your family. And in today's market report that we're going to do, I'm going to focus in on home prices, inventory, and mortgage rates. So stay around. We're going to jump into it right now. Hi, this is Andrew with the Andrew Smith team here in Frisco, Texas. And if you're confused by what's going on in the housing market, you're not sure what to make of it, you're not alone. Even the experts have been confused. They're trying to catch up. They're revising many of the forecasts that they had previously. Without a doubt, it hasn't exactly played out as people originally thought it was going to at the end of last year and beginning of this year. So I'm going to share my screen. We're going to jump right into that. So let's go back to December 2022. And this is an article from Fortune magazine. This is actually the headline. And as you can see here, a 20% home price decline. 7 forecast models are leaning crash. So back then, all the talk, as you probably recall, was crash, crash, crash. The bubble's going to burst. But it hasn't, right? But without a doubt, all of these headlines and all of this information was having an impact on people. As a matter of fact, this is a chart showing what consumer confidence in home prices, how it was tracking. This is the percentage of people who believed home prices would go down in the next 12 months. Move myself out of the way here. So you can see lots of talk of a crash, repeat of 2008. So you look right at the end of the year is when all of this peaked. So all of these talk of the crash really did have an impact on people, thinking that this is it. We're doomed. The market is going to plummet. The only time we saw anything similar was towards the end of the or during the middle of the pandemic, right here. Even in the aftermath of the previous housing market crash, when things were very uncertain, the percentage of people that thought prices were still going down was nowhere near as high as it is now. But the one thing I want to point out on this is that you can see that these lines here have been dropping quite a bit as the year has gone on, as more and more people out there are seeing that the market hasn't come tumbling down quite like they thought it would. So why is that? And I think the best way to explain why that is to take a look at how we got here in the first place. So as mortgage rates spiked, move myself back over again. As mortgage rates spiked, the expectation was that inventory would continue to grow. Again, home prices are based on supply and demand. So the idea behind it was that supply would keep growing and demand, due to high mortgage rates, would come crashing down. So this chart here, these lines here show the normal pattern from 2017, 18, and 19 in listings that come to market. So you can see in general, we peak in May as far as new listings coming to market. Well, last year, we kind of blew right through May and listings continued to climb. In fact, here we were towards the end of June. With that in mind, with mortgage rates going up and new listings still exceeding when they normally turn down for the year, had most of the forecasters, the experts out there, predicting that this is what was going to happen for the rest of the year, which led to those forecasts of price crashes. But that didn't happen. This is actually what happened. It was delayed. So by the end of June, beginning July, listings started to fall. So you can see rather than peaking here, we peaked here. And so it kind of changed things around a little bit. And from there, the number of homes coming onto the market, the listing count started to fall dramatically. As a matter of fact, the supply was falling faster than demand was actually going down, which is why we did see price adjustments, don't get me wrong. We did see a correction, which I'm going to talk about in a minute, but you didn't see the absolute crash scenario that many were forecasting. And even Bill McBride, he's the founder of Calculated Risk, and he correctly forecast the crash in 2008. And here's what he had to say at the time. He said, as inventory picked up sharply in 2022, I adjusted my outlook in October and wrote house prices, 7 years in purgatory. He thought we were going to fall and stagnate for about 7 years. He noted that a 10% decline in nominal prices now seemed likely. Fast forward the last month when the other part of this was said. However, the inventory surge in 2022 was somewhat of a head fake. Some potential sellers quickly listed their homes, probably remembering what happened with house prices in 2006 to 2011, but that surge ended pretty quickly, right? So that's exactly what I was just showing. And this is what it looks like when you play that out. So in 2023, this drop off that we saw at the end of last year continued, and as you can see here, this is national. We're a little bit different here in Frisco. This is national, but you can see where this started to peak in May, right? Nationally. And then we started to go. A much more normal pattern than we see most years. So the inventory actually continues to fall. It never quite got to the level that they thought it would. So with that in mind, if the inventory, the increase in supply isn't coming from standard homeowners, where's it going to come from? Right? So it's only going to come from new construction, which we do see a lot here in Frisco, which has definitely impacted our market. But you might also recall all the talk of a tsunami of foreclosures. We've been hearing that since the pandemic. And all of that talk picked up again at the end of last year, the beginning of this year, as the moratorium that was put in place to prevent foreclosures had expired. So naturally, all of these foreclosures were going to come to market. So where are they? Well, they're not coming, right? Here's a look at the foreclosure filings in the first 6 months, if we go back over the years, right? So in 2023, here we are, 186,000 foreclosure filings. And I actually saw a headline recently that said foreclosure filings are up 185% over 2021. And they're right. There was a moratorium in place in 2021. Only 65,000 took place. So that headline is correct, but it's not telling the whole story by any means. Not when you look back at the history and you see that foreclosures are a part of every single market, good and bad. For most of the years, look at 2013 or 2014, somewhere 500 to 600,000 foreclosures a year is very, very normal. That's part of the market. Things happen. There could be an inherited house that can't be afforded. People can pass away. There's a divorce situation. Something happens. They're part of every market. But to suddenly think that there's going to be all these new foreclosures hitting the market, they're not there. The numbers just don't show it. Now, these are foreclosure filings. So if we look at the next part of it, this takes it a different level. Now I'm looking at delinquencies. So in the foreclosure process, a loan has to go delinquent before a lender can start a foreclosure motion. So this is looking at Fannie Mae and Freddie Mac, and it's taking a look at how many loans are more than, I'll move myself out of the way here, are more than 90 days past due, right? So 3 months late. Where the numbers are going. They just continue to fall. Even this year, they're just continuing to fall. We're now at about 0.55%, right around 0.5%. So there's not a lot of loans in delinquency. There's not a lot of foreclosures coming. An overall inventory continues to fall. Right? So where exactly are we going to get this imbalance between supply and demand in order to create this big drop in prices that has been forecast for so long. And the truth of the matter is, it's simply not coming. So, with that in mind, what are the experts saying now? Right? So, this was the original forecast from the Mortgage Bankers Association, Fannie Mae, Morgan Stanley, and the AEI Housing Center. Okay, these were all made back in December. And at that point in time, you can see that the original forecast was between just over 0.5% all the way up to 20% declining prices. Well, this they put out in July. And now they're forecasting that prices year over year will either be flat or up to 6% positive. That's a big change. That's a big turnaround from where we were. CoreLogic and Zillow forecast prices a little bit different. They're looking at the next 12 months, not just the calendar year. So this was July. So CoreLogic are forecasting by next July, nationally, there'll be a 4.5% increase in prices, and Zillow are forecasting a 6.5% increase in prices. So with that in mind, now that we've covered some of those national numbers, what are we looking at here in Frisco itself? What is going on? Well, let's take a look. All right, so right here, what we are looking at is we're looking at the median sales price in Frisco. This is specific to resale homes, and it's going back over the past 3 years. And the one thing I want to point out with regards to this, forget mortgage rates for a minute. If you take a look at where prices were in September of 2021, look at this run up we went on between September of 2021 and April of 2022. Regardless of anything else, this is not sustainable. There had to be a correction of some point. This just cannot happen. It's unaffordable, no matter what the mortgage rate is. And as a matter of fact, the rise in mortgage rates, especially when they just crested 7%, that was the straw that broke the camel's back, so to speak. And that caused the correction that we saw in our local market. We see that home prices fell quite a bit from April, and they continued their downward trend all the way into October, November, before starting to move up again. And you can see here, they moved up again in July. As a matter of fact, as of July, the median sales price in Frisco is 5.1% higher than where we were a year ago. Now, as I mentioned, nationally, prices hit a new all-time high, surpassing what they hit in May a couple of months ago. That hasn't happened here in Frisco yet. So we've still got some room to go to get back to the high that we saw in April of 2022, but prices do continue to trend upward. Now, if I take a look at all construction types and include resale and new construction, which we have a lot of here, you can see the same run-up in prices is shown. But when we factor in the new construction, which is always priced higher, the percentage of appreciation year over year is not quite as great. We're sitting at 1.9%. So let's take a look at inventory, right? Because inventory is a key part of it. So that's supply and demand. Right, so I'm going to go back 5 years instead of 3 and show you what's going on with inventory. Is inventory up? Yes, it is. But look how far below it is from where we were in 18 and 19. Okay, so inventory in real estate follows a standard cycle every single year. In January, it starts to build. Usually June or July time here, we peak, we crest, and then we trend down through the end of the year. And people start putting their homes on the market. It goes back up again into June. We come back down, and so it goes. This didn't happen in 2020 due to the pandemic. We actually peaked in April, and that's when inventory really plummeted. In 2022, again, we peaked in July, went all the way back up. Then we came down, and here we are in July of 2023. So even though inventory, you might hear, is up, we've got 14.8% fewer homes on the market now than we did a year ago. So conditions here in Frisco are still really, really tight. The saving grace that we have is new construction. There's so much new construction in the area that is bringing the supply that we need to stop price increases accelerating even faster. Now, if you'd like to stay up to date on exactly what's going on in the Frisco market or any of the surrounding areas, in the description below, I've got a link to my market report. From that market report, you can track current pricing trends, inventory, median rent, you name it. You can look at it by price range, days on market. Super valuable. It's completely free, and you can sign up for it directly below. So again, as you can see, supply and demand, it's showing us that home prices aren't really going anywhere. As a matter of fact, the trend up in prices that we've seen looks to continue. I'm not expecting anything like what we saw previously. I do think we're going to continue trending upward based on all of the data. I've got the link to a video I just did last week as well that goes more into where I think prices are going to go for the rest of this year on the first part of 2024. So check out that. But the last question on this is mortgage rates. What in the world is going on with mortgage rates, and how are they going to impact things going forward? Now, if you've seen any of my other videos or information I've put out, you'll know that mortgage rates closely track with the 10-year Treasury yield, right? That's what they're closely tied to. And inflation is the enemy of long-term mortgage rates. So this chart we're looking at here is showing inflation, marked by the blue line, and mortgage rates, the green line. So you can see that mortgage rates in general lag behind what happens with the inflation numbers. So you can see here, the inflation went up, mortgage rates followed. Inflation fell. A little while later, the mortgage rate fell. You follow that all out here, you can see here that the 30-year fixed rate mortgage is still climbing. It's lagging behind the peak that we saw in inflation here, but inflation has been coming down, right? Overall, the trend has been down. And we haven't really seen that turn in mortgage rates as of yet. They've remained fairly sticky. But most of the experts out there are forecasting that that is going to change, and we will start to see mortgage rates trend down. As a matter of fact, the latest projections that just came out here in August from Fannie Mae, the Mortgage Bankers Association, and the National Association of Realtors, if you average all three of their forecasts together, you can see that by the end of this year, they're forecasting rates around 6.25%, just above 6% in the first quarter of 2024. And then by Q3 2024, this time next year, about 5.73%. So what does all of that mean for you? Well, there's a couple of things to point out here. Is right now, the thing to point out is we've got a lot of sellers that feel stuck. I do believe more inventory is coming, but if you look at a homeowner that's got a 3% mortgage rate, why in the world are they going to sell and trade that for a 7% mortgage rate? And the answer is they're not. Right? It's not that suddenly people have decided we're not going to move, we don't want to sell anymore. They do, but it doesn't make financial sense for them to do that at this point in time. So you've got a lot of homeowners that actually feel stuck by low rates. A recent survey by Realtor.com showed that if rates get into the lower fives, that will free a lot of people up. A lot of people at 3 to 4% mortgages will make a move, make the jump to the house that they're looking for a mortgage rate of 5 and 5.25. They just won't do it for a mortgage rate of 7. Now, on the demand side, it's important to note that we have got a lot of pent-up demand. So if you look at the number of people entering prime home buying age, traditionally, historically, you've got one of the largest segments of the population sitting on the sidelines right now. They were frozen out by the rapid rise in mortgage rates. It's simply unaffordable. So now what you're expecting, again, same survey is showing that 5%, 5 to 5.5% seems to be the magic number. I think everyone is under the same opinion that we're not going to get back to 3%. We're not likely to see it probably in my lifetime, based on all the information and when you look at it. Okay, but 5 to 5.5% is enough to get people to move. So you can see by this time next year, it is looking like we're going to be trending back in that direction. So again, all of the information I've shared with you today is based on the actual data, right? And there's nothing in any of the data right now, none of the leading indicators to show that any sort of bursting bubble or crash is on the horizon. Could it change? Absolutely. It's why I do these updates every single month. The things with the economy, things unseen could have an impact. But as of right now, that is what the data is telling us. So my hope with that is that I provided you with the information that you need to make the best decision for you and your family. So if you have any questions whatsoever, in the description below, there's a link to my calendar. Please feel free to schedule a call. I'd be more than happy to talk through any particular situation you have or answer any questions you may have. And as always, feel free to reach out via email or by phone, call or text. Andrew at theandrewsmithteam.com or 469-296-5230.